Hi there, I'm Peter Russell from Supertax. Thanks for watching another one of my video blogs. Today's topic is on RRSPs here in Canada, or otherwise known as Registered Retirement Savings Plans. This is a brief and general understanding. I also have an example of how to calculate the RRSP limit and any tax savings on any potential RRSP contribution. We're going to do that at the end of the video. But first, what is an RRSP? An RRSP is a registered savings vehicle under Section 146 of the Income Tax Act. It allows an individual to make contributions for retirement savings purposes. These contributions are generally accumulated on a tax-deferred basis and are not taxable until either the individual withdraws from the plan or at age 71 transfers the contributions to either what is called a Registered Retirement Income Fund, otherwise known as a RRIF, or a life annuity, where at that point in time, the contributions are withdrawn and taxed over a period of time, which is generally the individual's remaining life. Now, when you make an RRSP contribution, they are generally deductible on line 208 of your T1 General Canadian Income Tax Return. Now, how do you determine how much you can deduct in a given year? Well, that's based on the RRSP limit formula, which I'm going to walk you through. This is made up as follows. Any carry forward RRSP contribution room available plus 18% of the prior year's earned income up to a maximum of $22,450 for the 2011 year, less any pension adjustment for the prior year, plus any current year pension adjustment reversal, less any current year past service pension adjustment. Wow. Now that's a complex formula. Now I'm going to break that down for you even further. Now what is earned income? Earned income generally is the total of any of the following if you have them. Employment income, net business income, net rental income, support payments received, supplemental employee insurance premiums received, any CPP or provincial disability pension received, any royalties earned, less any net business losses, any net rental losses, any employment expenses, any union dues or professional fees paid, any support payments paid. Now, what is a pension adjustment? Well, a pension adjustment is the summary of pension credits, which represent the tax-assisted or sheltered benefits of an individual's involvement in a registered pension plan or a deferred profit savings plan. Now, what is a pension adjustment reversal? This is when an individual receives restored RRSP room because the individual is no longer involved in a registered pension plan or deferred profit savings plan, and their termination benefit is less than the value of reported pension adjustments and past service pension adjustments for those pensions over the years. Now, what is a past service pension adjustment? Well, these are generally referred to as post-1989 past service events. They can be any one of the followings: a retroactive change in the way pensions are determined, an additional period of past service credit to the individual, or an increase in retroactive benefits to the individual. Now, I have an example to walk through with you on how to calculate the RRSP limit and any tax savings with your contribution. So let's go to the big board. Okay, RRSP limit 2011. So say we're talking the 2011 year, we're trying to calculate the RRSP limit for this year, and of course we've got to know what our 2010 earned income is. So we're going to say our individual, he's an employee of a company in which he contributes to a registered pension plan. So his employee income for the year is going to be $85,000. and say he has some income from some other sources. Say he received some alimony, support payments received of $3,000. He has some net rental income of $5,000. He has business income of $4,000, and he has contributed union dues of $1,000. So we're going to calculate his total earned income for this example as $96,000. We calculate 18%, that works out to $17,280. That is less than $22,450, so we're going to go with that number. Now, we got to deduct any prior year pension adjustment. Well, let's just say the prior year pension adjustment for his pension contribution, his registered pension plan was calculated as $12,137. And let's just say for this example, he had a current year pension adjustment reversal of $2,000. Now let's also say that he had unused 2010 RSP room of $4,000. So we got to add that into this calculation. That's going to give us a total RSP limit of $11,143 for 2011. So this individual has until March 1st, 2012 to make that contribution for it to be recorded on his 2011 tax return. Now, how much tax would he be saving if he made that contribution? Well, we know, let's just say his total income that's reported on his return is probably similar in 2011 to what it was in 2010, because this is the 2010 number. Let's just say it's 96,000, the same number pretty much. We're going to say 96,000. Well, at $96,000, you are in the third tax bracket for federal purposes here in Ontario. So basically, we would be at a marginal tax rate of 43.41% at $96,000. That's made up as follows: 26% federal tax, plus 11.15% Ontario tax, plus surtaxes in Ontario, which is 56% of 11.15%. That works out to 43.41%. Sorry, 43.4% at $96,000. So when you make an RSP contribution of $11,143 at this amount, $96,000, you would be saving 43.4% taxes by making that RSP contribution. So let's say he did make the RSP contribution of $11,143. His total tax savings for this contribution would be $4,880. Okay. I hope you found this video informative and this example informative on the calculation of RSP limit and tax savings and the definition of RSPs as described before. If you have any questions or comments on this video, please feel free to leave them below, or you can definitely send me an email at peter@supertax.ca. Thank you very much and have a great day.